Traders. All right. I just did an hour and a half of video in two separate videos. Both crashed. So I realized that I guess I have to keep it to 10 minutes under, which is unfortunate because I really like doing these sort of live walkthroughs of price action. It's very helpful for me, and I think it'd be very helpful for you guys too. But we'll keep it intentional to under 10 minutes, and here's what we're looking at. I wanted to discuss confirmations, and I can't believe I'm saying this all again because I just did it twice for 45 minutes straight. But we'll do it. And for that, we should probably go to a fresh chart, even though we're seeing interesting stuff happen here. But let's go to a fresh chart. Let's just turn this into Microsoft here. Okay. Number one most important thing is higher time frame. We have to be at a higher time frame. Let me just put in some alerts for when we get to these areas that I want us to. Let's go one there, and let's go one there. All right. Most important, number one, higher time frame. Are we at a higher time frame point of interest? You can trade from anywhere you want. The price moves all the time. But if we're talking about positioning and entering a swing or longer term position, we need to be somewhere that matters on a larger scale. All right, so I'll put this as one example. This area we just tapped into. This was the video yesterday discussing, we're at a higher time frame point. Is this the bottom, right? So I don't think it's the bottom. Just put that out there, just to throw that out there. I don't think we came to the point that we want to come to. I think there's larger external liquidity down here. I think there's even a deeper pool that we could tap into below where we're at now. And based on price action as well, we can see that it's not looking so pretty. Now, I draw algorithms, right? I draw these lines that kind of are directing price. Not about the lines. It's really not about the lines. It's about what the lines mean. The lines show us intention. It shows us the slope of how price is moving, the momentum. And if price is selling down something really strong, it means, what does it mean? It means that we don't need to be coming above and grabbing liquidity to continue down, right? We're just continuing down with lower time frame liquidity. If something is tapering like this, for example, at least on the buy side here, right? Price needed to come up and grab supply, come to supply, regain sellers. Again, we didn't have enough here to break below this low. We had to find more sellers, fake out a lot of buyers, and build liquidity for a deeper pull move down. If we're selling down something really strong, we don't need to be doing that, right? Which it's not because we're selling down something really strong. We're selling down something really strong because we don't need to do that. So essentially, we don't need to be building more liquidity because there's enough liquidity, there are enough buyers stepping in at this level so that, and at these levels that when we start coming down, we're getting filled and we have fuel just adding to the fire as we move down. Okay. Now, confirmations. So we don't enforce our will on the market. What does that mean? We have these confirmations, we have these rules as traders, not to say we have rules, right? We don't not take a trade because it didn't follow a rule because it's a rule. We have rules because they mean something, right? Because the market works in a certain way and the market has to do certain things for it to do the subsequent thing in a healthy manner or in a probabilistic manner. So we create these rules based on knowledge, based on experience, based on what the market, how the market works in order to say, okay, this rule is fulfilled, which means that this next thing can happen in the way it's supposed to happen, okay? So what do I need to see? And it's all really just based on the same thing. I want to see we're at a higher time frame level. Oh, where's this? Where's that level? Okay. We're at a higher time frame level. Okay. Let's just say we expect this to be, this is our point, right? Let's say we have this line here from a higher time frame point, and this is where we expect the bottom to be. Just hypothetical. I want to make sure you guys know that this is a hypothetical talk, that this is the bottom. Okay. We first, of course, want to see tapering. And what does tapering mean? Tapering means, like we just said, sellers are weakening. Sellers have to come up versus, as opposed to when price is selling down like this, very strong, right? Where we don't need to come up and build liquidity and continue down. It's just continuing down, right? We have enough liquidity. Sellers are very strong and aggressive. They're continuing down. When we start to see tapering, what tapering essentially tells us The sellers need to come to higher points, get more liquidity in, build more liquidity underneath, right? So what that means is buyers, 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 buyers. Oh, sellers. Now, how are these sellers moving this? All these buyers are now selling too, right? So we have more sellers because we're at a more attractive level up here for sellers, more attractive level up here for sellers. And we have all these buyers turning into sellers. So that's liquidity, right? We have fuel and more fuel and more fuel. Now, what tapering is doing is saying that we are no longer selling down strong. We're no longer breaking below these levels much more in a strong manner. Meaning, if we were selling down strong, we'd go from here and we'd be here, we'd be at the bottom here already. But we're not, because we're finding taper, we're finding some strength on the sell side. Buyers are stepping in at higher and higher prices. Microsoft alert. Here we are. All right. Shoot. Let me pause that video. Get back to you. Oh, I'll be back. All right, we're back because sorry about that pause. Basically, the past two videos that I was making were all waiting for something like that to happen, and it happened. Oh, man, it happened again. Oh, this is important, actually.
Order partially filled.
Okay. I'm going to pause again for a second. I'll be right back. All right. Sorry about that. We're finally getting the push down. I just had to enter positions because I was waiting all morning to enter some short positions, and we finally got the move. I entered both down here and up here, and I'll explain. But this is a good time to be making this video because we didn't get confirmation for longs. We actually got the opposite. Okay, so I'm lost in thought now. I apologize. Let's pause again. So where were we? Weakening selling because of tapering. Okay, what does this all mean? What does this all mean? All this tapering, weakening selling, and how do we see it? How do we confirm entries? The question we need to be asking is, at what point does one side fail to do what they're trying to do? And that obviously entails having a higher time frame bias. For me, on that small trade I took yesterday, I took this tiny little trade here, right? It was a long here, and it was up to this liquidity level. It was nothing, right? But it was successful. And it was successful because I didn't have to wait through all this chop, because I waited for one side to fail. And which side was that? The sellers failed. In this case, the sellers failed here. They tried to bring us lower, break below these lows, and they failed. That's essentially what a liquidity grab is. Sometimes it's intentionally to grab liquidity and make a strong move higher. Sometimes it's just, you could look at it as just failure of the sellers to break us below this level. If they were successful, they would have brought us below this level and continued their way down, but they weren't. So that to me was the failure, and that allowed me to enter the trade and make the move higher. Okay, so on a grander scale, what we're trying to say is levels are created, liquidity levels are created because they need to be, because price needs them to move, right? So when we see price coming to a bottom here at a higher time frame level, you're not wrong for thinking, is this a bottom? But what do we need to see for it to be a bottom is not just support showing up, and not just the lower time frame liquidity grabs. What we need to see is a higher time frame process happening, and that process isn't happening on the 1 minute or the 15 minute. That process is happening on the hourly. And we're talking again about swing positioning and higher time frame positions. I love how this is moving right now. Apologize to the longs. What we need to see is, again, that failure to make low and continue. Obviously, we haven't seen that here, right? Where this was the former low. We saw ourselves come down strongly, and you would expect and want to see, if this is a higher time frame level, to start seeing some reaction from the bulls. Now, yes, we had a little move to 376 as we predicted, but we would want to see a true bullish reaction where we're breaking above higher levels and then coming down and not able to fail lower. Right? We didn't see that today. Obviously, we're failing lower. So it's a higher time frame process. So that's on the lower time frame. Now, if we're really looking for a higher time frame confirmation, come down. We want to see us break above liquidity, find buy-side liquidity, replenish sellers. So we now have a lot more sellers in. If there's a lot more sellers in, you would expect we're going to break lower if we're continuing lower. But if it's the bottom, we're going to have these new sellers in. Maybe we'll move a bit lower, but we'll fail. We'll fail to actually continue lower, and then we'll start making higher, right? And this is where a trend begins. We make a higher high. We break above this level. We have new sellers in. They come bring us down, but bulls are now stepping up higher. So not only are bears failing to bring us below this former support level, but they're actually not able to bring us below this liquidity level here. And bulls are stepping in more aggressively higher and continuing this process. So maybe they come above this level here, and sellers replenish and bring us down below this liquidity level. So now you're all scared because we're not creating higher high on this lower time frame, but we're essentially doing the same thing vice versa. We're taking out bulls. Now sellers want to continue, they'll continue down, but if bulls start to reclaim and react, they will start to do the same thing and they will continue higher. And when you start wedging, right, when bulls are unable to get us higher, bears are unable to get us lower, you start to see this coil effect. And this coil it could be indecision or it could just be liquidity building. The bulls don't have enough liquidity built above these levels yet. So we're building more levels, more liquidity, so that when we do make the breakout, when we do have sufficient aggression from the bulls, we are able to have fuel, right? We're able to truly make a breakout. And it's not just a breakout of this level. We want to make a breakout of this level. We want to make a breakout of this level. So liquidity down here is necessary to move up here. Now, it's a continued process, right? And that's why the market's so tough to read and it's so multi-time frame driven, because on this lower time frame, you have lower lows and lower highs. On this time frame, we're starting to make a higher high and a higher low, and then we start to make another lower high and you're confused, or a lower low and you're confused because we're supposed to be in an uptrend. Well, we are in an uptrend, but we had to come all the way back down to this level, right? Even though we were making, we were uptrending here, we now just broke that uptrend and we came down to here. Still an uptrend because this is the low, right? What we had to do is clearly build more liquidity, get some new buyers in, get some more buyers in, let the sellers build liquidity on the way down, right? So the sellers throughout this time, all right, we created came to this level, rejected. We didn't have enough liquidity to break above. So sellers now start bringing us down. They're thinking it's a downtrend now. We come down to this level, buyers step in, right? Because this is apparently their higher time frame objective. And now all these levels are fuel. Now we break above here. We have a lot of sellers that are now buyers. We have a lot of new breakout buyers coming in. Now we break above here, more fuel, enough to then break above this level we wanted, right? And now that level with all that liquidity and all those sellers that were in there from that second time around, first time around, are now fuel for this next level, right? And now we go to this next level up, we can't break it. Are we no longer in an uptrend? Well, on this lower time frame, we might break these levels, right? Grab all this liquidity for move down, but that move down is to build liquidity for the move up, right? So come back to this liquidity pool, get the buyers, the passive buyers in, and then the aggressive buyers step in. Once we break above here, we have aggressive breakout buyers. Above here, aggressive breakout buyers. Oh, boom, we broke this level, Next, what's next, right? And it's a continual process, but it all starts, one, with this first information on the lower time frame, but that's not enough to give you a swing long-term position. That's enough to give you the information that we're going to try, that we're lacking liquidity to continue lower here. Now we have to start proving on a bit of a higher time frame that we could break this level and start doing the same process, and then break that level and start doing the same process. This is when, on these pullbacks, is when you start to see, okay, bears are unable to bring us below this level, right? They're unable to do what they want to do. This is where I can start building my longer term position with more confidence. This may be down here as one contract to get this move, right? Maybe take profits. That's what everyone's doing. They're taking profits at this liquidity level because we haven't proved anything. And then once we come back down and we hold here and we're able to break above this or not break above it, right? Even if we come back down there and we start to do the same thing again, and maybe we take liquidity down here, still same process, because we're still holding up one above this and we're still doing this intentionally. We're building liquidity downward in order to then break above this level, have enough fuel for that break and for a break to continue a break, and then go to the next level. And all started with that one small confirmation down here, which we didn't get obviously on Microsoft. But it continues, and more importantly, it continues when we are making these moves, when we're building this liquidity, intentional liquidity. We want to see ourselves stop at this level and get rejected, right? We want to see it, and then we want to see something happen on the way down. We want to see us come back. We need to come back. But how do we come back is important, right? How does the pullback look? Is it aggressive? Is it tapering? Is it clearly, setting levels on its way down so that we can then break up above those levels? If we come for a third time, some people look at it as triple top, and that's nonsense. Triple top can be a perfect liquidity level to fuel us for a massive breakout higher, right? It's all relative to where you're at and what you're doing on the way. So this might be a little confusing. I don't know. I could probably do a better job of explaining it, but I'm all over the place right now after 2 hours of these videos. I hope this was helpful to a certain extent. I'll continue to do more of these. Ask your questions. Let me know what's unclear to you. Happy trading, all.